Hi, it's Grant Abbott, your strategist here. I found yesterday, I just saw the Senate Select Committee with both the Labor, also the Greens and the Liberals. They're all looking at reducing the capital gains tax discount. At this present point in time, it's 50%. Originally, when capital gains tax came out in 1986, it was only inflation adjusted gains that were put in place. The government said, well, this is too much work. And in the 2000s, they said, well, let's scrap that. We'll have nominal gains. So look at the cost and what you sell it for. And then for individuals, there's a 50% discount. For a self-managed superannuation fund, it's 33 1/3. For companies, there is no discount. If you do it in a trust, that discount flows through to the beneficiaries. Importantly, from that perspective, the government now believes that there's too many wealthy people in Australia who are hanging on to large potential capital gains, and essentially the maximum tax they'll pay maybe is 22.5%. They're looking at changing that and dropping the 50% down to 25%. Will that happen short term? Well, it's the same thing. They're also talking about wealth taxes and intergenerational, what we call estate taxes of 20%. All of these things you need to take into gear and take into account. If you've got assets in your own name, it's important to start to look at structuring, and that's what we do best at Legal Back Office. Make an appointment with me, nush at legalbackoffice.com.au, my general manager. Make an appointment. We can not only have a look at protecting your wealth, but more importantly, giving a shield, putting a moat around so that we're protected from future tax changes. Don't let them just run over the top of you. Grant Abbott, signing off.